GHCL, the adjusted profit was down about 20% on year. They had their revenues very flat at about 750 crores, and it was clearly the headwinds in the home textile segment that seemed to have dented the profit. Let's bring on board Mr. R.S. Jalan. He's the managing director at GHCL, now joining in on ET Now. Welcome to the show and thank you for being with us. And clearly, I think this time around your numbers have been affected largely on account of the annual maintenance shutdown of the soda ash plant. The forex market as well has weighed down, it seems. What was the exact loss of production and the exact forex impact that we've witnessed?
As you rightly said, this performance of this quarter vis-a-vis the quarter one of last year, if you find on a equal basis, the difference is around 14 crore. Last year, the same quarter, we have achieved 76 crore. Against that, this year we have achieved 62 crore. Now, this 14 crore primarily is because of the textile division, where last year the downfall or the headwind in this industry has been felt from the second quarter, and that has been seen over a period of time. And however, now some positivity is being seen in this business. Therefore, if you look at quarter four last year versus this year, there is an improvement, significant improvement in this business. However, the highlight of this whole performance is in the soda ash division. This year, this quarter, we had approximately around 15,000 tons of the production loss because of the annual shutdown, which happens in 18 months of after the 18 months. So last year there was no annual shutdown. So this 15,000 plus the forex, which approximately around 7 crore. If I add both these two, approximately the figure is around 22 crore, and that 22 crore has been able to cover by the better efficiency as well as by the better contribution on the soda ash. So we have been able to do a remarkable job on our soda ash business. However, as we have informed before, textile has a beating of this number, which is now being seen as a positive side happening sequentially.
Okay, hi Mr. Jalan, this is Mubina as well joining in. Yes, you spoke about the forex impact. I just want to know, you did take price hikes. So how did essentially your realizations change? Were they able to cover this impact like you spoke about? And also you spoke about the soda ash business, which has done well. But the anti-dumping duty expired this month. We haven't seen a price decline yet because of the tight supply globally. But what do you anticipate on the pricing front over there in Q2 and Q3?
If you look at last quarter which has ended on June, we have taken a price increase of around 3%, and this has been able to cover our cost increase, and therefore the price or the contribution per ton remains at the same level. Going forward, yes, anti-dumping duty on some of the countries has expired on 3rd of July, and we have not felt any impact of that because overall globally the soda ash market is tight. And we believe that going forward also, we should not feel any pinch of duty withdrawal. However, on the two countries, on Turkey and Russia primarily, the duty continues.
And suppose we end up seeing soda ash prices dip, especially because of the higher supply from Turkey, then will you be taking any sort of price hike, to support the margins, to improve your realizations?
See, if you look at the dollar, rupee dollar has also taken a beating of roughly around 4 to 5%, and that is an added advantage to this business. The imported product will be costlier by 4 to 5%. To that extent, we have a protection, and the duty on the Turkey continues. So we don't see at this point of a time any threat of major volume coming in from Turkey or any other part of the world. And definitely, if the cost pressure goes up, we will have an opportunity of taking the price correction. So in a way, we will be able to protect our margin going forward as well.
Will your soda ash volumes grow around 5% this year, along with the realization improvement in single digits?
Soda ash volume, yes, some improvement should happen, though there is no major capital expenditure we have done in the last year to support any volume increase, but still because of the efficiency improvement, we will be able to see some volume increase. However, we will get a major advantage of the volume next year in 1920, because 1 lakh tons of the soda ash expansion is underway, and that will get completed by March 19. And my understanding is next year we will have around 10% of the volume increase, and that will add definitely a significant amount of our EBITDA margin, because the gross margin on the soda ash business is always on the higher side.
Okay, Mr. Jalan, thanks so much then for joining in, explaining what exactly transpired in Q1. There was a bit of weakness in the margins, which did weigh down in the first quarter, Pat. But yes, Mr. Jalan spoke about how soda ash prices could move, and also the fact that even though anti-dumping duty has expired, he does not expect any sort of significant impact of the same on GHCL's own, volumes.